Hello, trading is closed on August 28th, 2018. Yesterday we said that what the bulls had to do to continue the rally would be to gap up over this high, which is what they did. Looked for the pattern with the early low, late high. Got that. The pattern tends to rally into the close near its high. That didn't happen, and unless we invalidate it, the negative implications of this, unless we invalidate that by gapping and promptly taking out this high tomorrow, lower prices should print. Tomorrow's pattern is the one with the early low. It's never good when you gap up like this, can't take out any of these highs and can't even close over the prior day's high. But it would be a lot more convincing had we gone under this low at the close and we came close before reversing at the end and going into positive territory. It would have been a lot more convincing if the drop had continued, but that didn't happen. During the day, MEJT said this drop wouldn't stick, this rally wouldn't stick, and this wouldn't stick, this rally, and they've all retraced already, so MEJT isn't saying much about tomorrow. Well, for tomorrow, unless we gap up, as we've said, we should see lower prices, and the real question concerns the longer-term pattern. This completes to Mark's 913.9 sell signal. A lot of these have failed, and I'm not convinced yet this one's not going to fail. But if it worked, you typically get a pretty big drop, and you would look for 28.1837 to be undercut within 3 days, ideally, 3 trading days. We also have a bar almost completely over the upper Bollinger Band, a sign of being overextended. And if we were to gap under it, that would be a reversal involving the upper band. It would target a challenge of the lower band, which now is right down here, but of course the band moves. We still have my NASDAQ McClellan oscillator sell signal. We've gone over the band and then traded under it. We haven't gone back up to go over the band again. Nothing works every time, but it's typical of the top. Today's high is a Fibonacci target of a prior consolidation. Here's this huge consolidation. You ignore this business in the middle. You take this low and this high. There's your hit. Here's your grid with hits at other Fibonacci levels. You can do the same thing, ignore this move and take this low and this high and get the same target. You can even ignore this, take this low and this high and wind up with the same target. So this, on multiple levels, today's high is a Fibonacci target of a prior consolidation. If the high holds, it's a plausible end for this leg. I'm not convinced the bulls aren't going to win again. The futures are already up. They're close to this high, and all we have to do is open over this high to invalidate a lot of those negative things. If, on the other hand, we gap down smartly at tomorrow's open, at least under this low, and keep dropping, my mind would change. If that were to happen, I think we have enough to say that this leg probably ended today. Certainly is close enough to my date, and there certainly are enough signs that if we start a big drop tomorrow, I believe this would be it. But it hasn't happened yet. So the call for tomorrow is the pattern with an early low. Doesn't mean we don't gap up first. Gapping and taking out this high early, the rally goes on. If we don't, lower prices should print. Doesn't mean we have to close lower, but there should be a tradably lower move. But if, on the other hand, we start down smartly with a sharp gap down under this low and preferably even lower than that, if that were to happen, I'm going to call this as a high. So let's see how we open tomorrow, and that's today's call.